Welcome to The Explainer. Right. So today we're looking at AT&T's Q2 2026 earnings report. And man, let me tell you, this is a seriously fascinating story. It's essentially a masterclass in how a legacy telecommunications giant successfully reinvents itself as a modern connectivity engine. If you follow the telecom space, you know exactly how incredibly competitive it is right now. But what AT&T is revealing in this new data, it isn't just about surviving. No, it's about a highly deliberate, multi-year strategy that is, finally, firing on absolutely all cylinders.
Okay, let's dive into this. Notice the specific language CEO John Stankey is using here. He talks about structural advantages, an industry-leading position in fiber, and points out that their operating scale literally can't be matched. I mean, wow. This is an incredibly confident, forward-looking tone from management. They aren't just talking about playing defense against their competitors. They are aggressively claiming leadership in this next era of connectivity. But hey, we all know talk is cheap on Wall Street, right? So we need to see if the hard numbers actually back up this supreme confidence.
Here is our roadmap for today. We'll start with the connectivity strategy, then look at how they're adding 1 million customers, break down the financial growth, talk about saying goodbye to copper, and finally, look at their future outlook. Don't worry, we're going to break down all this dense financial data into a clear, logical story.
All right, moving into section 1, the connectivity strategy.
AT&T's whole accelerating growth narrative is really anchored by one massive top-line achievement, and that is reaching over 38 million fiber locations. They claim that's actually the most in America right now, and as we know, fiber is the absolute gold standard for internet connectivity today. By building out this huge physical footprint, they're laying the literal groundwork for everything else we're about to discuss.
Now, what's really interesting about this slide is a specific metric called the convergence rate, which currently sits at a staggering 42.5%. To demystify the industry jargon a bit, convergence just means a customer relies on you for more than one critical service. So in this case, nearly half of all the households that use AT&T for their advanced home internet are also choosing them for their wireless cell phone service. When a household bundles both of those things together, well, they become highly profitable, incredibly sticky customers. It's the exact kind of loyalty telecom executives literally dream about, and it is the core engine driving their entire corporate strategy right now.
Let's jump into section 2, adding 1 million customers.
Over 1 million. Just think about that. That is the massive milestone of advanced connectivity net customer additions they pulled off in just one quarter. In a completely saturated market where, let's face it, everybody already has a cell phone and internet, adding over 1 million net new connections in just 3 months, that's a huge testament to how well this new product mix is actually resonating with real people.
But let's break down that giant abstract 1 million number into its exact components, because the mix is what really matters here. This growth actually spans all 3 key pillars of their strategy. They added 432,000 postpaid phone subscribers, which, by the way, is their strongest consumer postpaid wireless growth in over 3 years. Add to that 367,000 fiber internet additions and another 279,000 fixed wireless internet additions. They are firing on all cylinders across the board, capturing real market share across mobile, high-speed fiber, and fixed wireless.
So the crucial point is this. They aren't just gaining customers through, flashy short-term promotions. They are actually keeping them. Crucially, their postpaid phone churn is incredibly low at just 0.86%. Churn, if you're not familiar, is the rate at which customers leave. Keeping that number below 1% is honestly exceptional. Plus, they're continuing to expand the net, reaching 38.6 million total fiber locations and confirming they are totally on track to hit 40 million by the end of 2026.
Moving on to section 3, financial growth and profitability.
Okay, so this is what operating leverage actually looks like out in the real world. Popline advanced connectivity revenue grew a very healthy 5.1% to $23.5 billion. But because they have this highly scaled network already in place, that 5% revenue growth somehow translated into an 8% growth in EBITDA. And it gets even better. Operating income absolutely exploded by 20.3% year over year, hitting $7.3 billion. Whenever your bottom line is growing 4 times faster than your top line, yeah, your business model is highly optimized.
Now for Wall Street, the ultimate proof of a healthy business is free cash flow. And year over year, their free cash flow jumped 6.3%, from $4.4 billion up to $4.7 billion for the quarter. Remember, this is the actual cold hard cash left over after paying all the operating expenses and capital expenditures. It's the lifeblood of any mature company because it dictates what they can actually afford to do next.
And what are they choosing to do with that cash? Well, they're rewarding their investors. They announced accelerated share repurchases, planning to buy back a whopping $10 billion worth of their own stock in 2026 alone.
You definitely don't authorize a $10 billion buyback unless your management team has extreme, unshakable confidence in your future cash generation and your dominant position in the market.
All right, let's shift to Section 4, saying goodbye to copper.
And this brilliantly illustrates the dynamic AT&T is managing right now. It's really a tale of two very different networks. On one side, you have these booming advanced connectivity revenues of 5.1% to $23.5 billion. On the exact opposite side, you have their legacy services, the old copper wire phone and internet networks, and those are plummeting by 25.9% down to just $1.6 billion. But here's the thing. This isn't an accident. This is a deliberate, carefully managed decline. They are actively, purposely transitioning away from their legacy past.
To show you just how aggressively they're pushing this transition, over 85% of their wire centers are now fully approved to entirely stop selling legacy services. Think about that. They are quite literally shutting off the tap for the old copper network technology.
And here's the exact timeline for that copper sunset. They expect these legacy service revenues to keep declining at a 20% or more clip this year, becoming virtually immaterial to the company's bottom line by the end of 2029. Now, importantly, legacy EBITDA will actually turn negative after 2027. Why? Because it costs money to safely power down and decommission all that old infrastructure. So yes, it's a short-term financial drag, but the ultimate goal is to substantially eliminate the immense direct costs of running an outdated, redundant copper network, which of course frees up even more capital for fiber.
Finally, let's look at Section 5, Future Outlook and Returns.
Let's move to and see how this builds into their promises for Wall Street over the next 3 years. They are walking a very delicate tightrope here, and honestly, they're executing it perfectly. Step 1. They are still pouring a massive $23 to $24 billion annually into building out this fiber and 5G network. But despite that enormous capital expenditure, Step 2 is maintaining a strong $1.11 per share dividend. And Step 3? Executing a staggering $24 billion in total share repurchases between 2026 and 2028. It's wild. They are investing heavily in growth while simultaneously showering their shareholders with cash.
And they can make those huge promises precisely because of this escalating free cash flow timeline. Look at this. They project $18 billion plus in 2026, stepping up to $19 billion plus in 2027, and reaching an incredible $21 billion plus by 2028. This proves that their connectivity growth engine isn't just a top-line revenue play. It's designed from the ground up to scale highly profitably over the long term, especially as the heavy lifting of the fiber build-out tapers off and those legacy networks are finally switched off for good.
Which leaves us with this final thought. AT&T is placing a staggering $23 to $24 billion annual bet on fiber and converged connectivity. They're shedding their copper past to build a high-speed future, and right now, the momentum is undeniably in their favor. But, as we all know, the telecom landscape never sits still. So will this massive, relentless investment permanently secure their dominance in the next era of connectivity? Or will their competitors find a way to catch up and close the gap? It's going to be a fascinating battle to watch unfold. Thanks for joining me on this explainer, and keep learning.